Since the summer of 2020, precious metals have been quite disappointing, although with some bounces to the upside from time to time. Precious metals miners have been particularly disappointing, where the miners are actually lagging behind gold itself, at least over the last several weeks. Welcome to myfinanceteacher.org, where I post regular updates on the general stock market, precious metals, energy, other commodities, and cryptocurrencies. Today I want to talk about how much more pain is there likely to be in holding the precious metals miners. More specifically, I'm going to be looking at GDX over the last several years, since basically the beginning of 2016. First, let's start with this chart, which is 100 times GDX divided by gold price. And the upward looking arrows on this chart indicate where the intermediate cycle lows in gold took place. As you see, often GDX continues to underperform after the intermediate cycle in gold, as it did, for example, over here in late 2017, early 2018. GDX continued to underperform gold for a couple of months before it finally caught up and overperformed into the rallying phase of the next intermediate cycle in precious metals. Similarly, in the second half of 2018, GDX continued to underperform for a couple of weeks after the intermediate cycle low in gold before catching up and overperforming over the next several months. Somewhat similarly, in the middle of 2019, GDX was basically on par with gold for a couple of weeks after gold's intermediate cycle low before outpacing gold to the upside over the next several months. And in late 2019, GDX actually started to outperform gold to the upside before gold reached its intermediate cycle low. And looking at next 4 intermediate cycle lows, in March 2020, again GDX started to outperform gold to the upside just a few days before the intermediate cycle low in gold, so that's basically reaching the cycle low at somewhat similar time frame. Same thing again in November 2020 and in March 2021. On either side of this short intermediate cycle, GDX started to outperform gold just a few days before gold reached its intermediate cycle, so basically reaching the bottom at quite similar time frames. But most importantly, what's going on right now is GDX have been underperforming gold over the last 1.5 months. But my point here is that we have seen in history that GDX might actually underperform gold for several weeks before miners actually catch up and create even better gains than the commodity itself. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. So coming back to the current times, although there are significant risks at the moment, and I will talk about the risks near the end of the video, and I am reluctant to give up my positions in GDX and gdxj even in the face of those risks, because the miners are noticeably undervalued. So talking about being undervalued, let's try to look at the performance of this strategy where, let's say, we enter into GDX positions when it's 10% below the 200-day moving average. Over the last several years, say from the mid-2016, this strategy would create 6 entries, one being in November 2016, where the drawdown will actually continue for another 5 weeks, reaching the maximum drawdown of around 9% 5 weeks after the entry. That could be quite painful, but the maximum gains would be achieved 13 weeks after the entry with around 21% gains. That, of course, would be into the rallying phase of the next intermediate cycle in precious metals. So let's see how this strategy would perform over the next 15 weeks after the entry. The next entry would be in March 2017, with a relatively quick recovery of maximum gains of around 12% 6 weeks after the entry, and the maximum drawdown during the 15 weeks after that entry would be around 4% 9 weeks after the entry, similarly to what would happen only 1 week after that entry. The next entry with these conditions would be in August 2018, with a drawdown continuing for another month, which would be quite painful with a drawdown of over 12%. I distinctly remember that prolonged decline into that intermediate cycle in the second half of 2018. I've mentioned that in one of my recent videos, I've mentioned that that was the time when I got unpleasant comments from the viewers on YouTube. However, the recovery would take place, reaching a maximum 10 weeks after the entry. However, that maximum is disappointing, under 1% gains. The next entry for this strategy would be in March 2020, with the decline continuing for only 1 week, reaching a maximum drawdown of around 5%, and 10 weeks after the entry, a maximum gain would be just under 60%. The next entry would be in January 2021. Again, the drawdown continuing for more than 1 month, continuing for 5 weeks, reaching a maximum drawdown of over 7% 5 weeks after the entry. That would be quite painful, but 9 weeks after the entry, the maximum gains would be over 57%. And most importantly, the most recent entry for this strategy would be in August 2021. And so far, 5 weeks after the entry, the drawdown is 3%. So yes, it is unpleasant that miners are underperforming gold over the last several weeks, but it doesn't seem to be something extraordinarily unusual. Next, let's have a look at more details of this strategy 15 weeks after the entry. We see these 5 attempts in November 2016, March 2017, August 2018, March 2020, January this year, and August this year. So far, we haven't filled up these 15 weeks after the entry yet. But generally we see that red color is mostly in the upper part of this table, so the drawdowns usually take place over the next couple of months after the entry, and usually the green color is mostly on the bottom side of the table. We see the average gain over here in the rightmost column, where the first 3 weeks on average create very modest gains, and a couple of months after the entry we see the gains on average reaching double digits. The maximum drawdown is at the bottom line, ranging anywhere between 4% to over 12%. So the current drawdown of around 3%, nearly 5 weeks after the entry, is unpleasant, but nothing extraordinary, as I've just mentioned. However, in my own positions, all shown in this model portfolio for the members, by the way, unfortunately, my drawdown at the moment for GDX and gdxj is somewhere around 15%. The reason for that is because this intermediate cycle in late 2020, early 2021 was unexpectedly short. I got into GDX positions somewhere around $35, not far from that intermediate cycle low, expecting the rally to continue for a few months, as it usually does. However, it was cut very short, and I did manage to get out at the top. So I held through, expecting a bounce from this support zone at 30 to 31 on GDX. The bounce came, I added more into the positions, expecting to actually get out of GDX somewhere around $44 when GDX was about to retest the previous highs. However, again, miners have underperformed gold over the last several weeks. And while gold has already bounced out of the most recent intermediate cycle low about 1.5 months ago, GDX is still retesting this support resistance zone at around $30-31. So talking about the risks that I've mentioned, because GDX has actually hit on this support resistance zone several times over the last couple of years, and because, as I've mentioned in many of my previous videos, support resistance zones become weaker when price hits it again and again, there is significant risk GDX might actually break down to fill some of the gaps on the daily chart. The gaps are somewhere around 26. So such a drop to fill that gap could be quite painful, in which case miners would be outstandingly undervalued versus being noticeably undervalued at the moment. Looking at this 14-week RSI is now close to the levels where the drop below those levels only happened a couple of times since this bull market in gold began. One time a significant drop below current levels on RSI took place in second half of 2018 into that prolonged decline into the intermediate cycle low, and once with a flash crash in GDX in March 2020. While RSI didn't really drop that much below this 36 level, that is just because the price recovered very quickly, but the drop in price was quite significant. So if this support resistance around 30-31 doesn't hold, there is big danger ahead. But I'm still reluctant to sell relatively undervalued miners, although they might become outstandingly undervalued over the next few weeks. So what are we going to do? Well, I'll share my strategy with the members at myfinanceteacher.org. For now, I wish you a productive Monday and good luck in your trades.